Hello, everyone. This is Tom Fox back for another episode in our special five-part series on Lextegrity. In this episode, I have back Andy Miller, and we're going to pick up where we ended on continuous risk monitoring. And first of all, Andy, welcome back.
Hey, thanks for having me again, Tom. Really appreciate it.
Andy, I know you're aware, last June, the Department of Justice released a update to its evaluation of corporate compliance programs, and it pretty directly stated for the first time that CCO types not only had to have access to their company's data, whether that data be siloed, whether that data be in different data lakes, uh, and they would be sanctioned if they were in an enforcement action and didn't. And I really wanted to use that as a way to introduce data analytics, and how the Lextegrity suite of solutions can help companies answer that DOJ inquiry.
Yeah, it's a great uh, that's a great question, Tom. I think that DOJ guidance has really been an eye opener for a lot of risk professionals and companies out there that they need to do better. They need to have access to their own data as risk professionals, and they need to have a plan, an approach, and an actual program to monitor their data to make sure they're preventing and really detecting anything that could be fraud, corruption, bribery, or could put your company in danger, especially as the DOJ is ramping up their efforts. We have a continuous monitoring solution that provides compliance and audit teams with a comprehensive way to keep a pulse on transactional spend and revenue risk. And really, within that application is dozens of pre-built data analytics across a spectrum of focuses. We've got risk-based, statistical, behavioral, and policy-based risk analytics that all combine to form a risk score that can then be prioritized for review. I mean, we really recognize that in monitoring, you cannot watch and look at in detail every transaction, every spend transaction, every revenue transaction that comes through your company. It's too much. So you have to prioritize that in some sort of methodical way, in some sort of risk methodology to make sure that you're getting those items that are high risk to the top of your queue so that your risk professionals whose time is very valuable is looking at those. And when we think about the Department of Justice and what they said is that you can no longer sit back and just hope that nothing affects you. You have to be proactive. You have to be digging into the data. You have to have access to the data. And it almost seems funny to say that, but you've got a lot of risk professionals out there that have no access to data. When they need data, they have to beg, borrow, and plead with their IT colleagues or the business application owner, please give me some data based on this hotline call that I heard, or based on something that's going on with their organization, and they're waiting weeks to get it, and they're completely losing flow of what they were doing, which was trying to track down a particular risk that could become a huge liability for the company. So in general, to wrap that all up, I think it's incredibly important that risk professionals are out there thinking about how they can respect what the DOJ has put out there by making sure they've got a program, they've got tools in place to support them in monitoring their transactional data from a risk perspective.
Andy, there have been companies that have built these types of systems in the past. They've been completely bespoke. And frankly, I think one of the true innovations of Lextegrity has to be able to create an out of the box solution, yet best in class. But then the third component you've overlaid that is you can actually tailor it to the specific company. So it's sort of, in my mind, the best of all worlds. And I was wondering if you could speak to that issue on how you're able to tailor the solution to the company you're partnering with, but also how the Lextegrity solution compares to some of these bespoke systems that were very expensive, very cumbersome, but at that point were sort of cutting edge.
Yeah, great. I'm going to break that down into two areas. I'm going to give a little flavor about how our continuous monitoring solution is flexible and curatable to your specific company, and then touch on what you had said there of what others are doing and what has been traditional in that area. But in general, our monitoring solution has over 50 analyses, risk analyses, with a fourth coming soon, where we look at employee spend, vendor spend. For our life sciences company, we're looking at spend with HCPs and HCOs, as well as we're getting into an area of revenue risk with your customers. But we have analyses that are broken out in each of those areas to look for specific types of risk. In that general risk-based area, we're looking to identify transactions that could be associated with some wrongdoing, like bribery, corruption, fraud. I mean, specifically our conflicts analysis, which as an example works to identify sham vendors that were enabled by employees on the inside, insider risk, would have an opportunity to, really defraud the company in this specific way. So our analysis is constantly matching the details of your employee master file with the details of your vendor master file, or even more specifically, the payee details of the specific payment or invoice that is coming through. And it's intelligent. It's not just looking for names, because again, I don't think anybody's going to create a sham vendor in your own name. They're gonna use something different, but they may not be smart enough to change their address or to use a different address or a PO box. They may not be smart enough to change a phone number or to actually get a legitimate tax ID. So we're getting into those areas and trying to figure that out in an automated, analytical way. We also have statistical analyses, which are looking at outliers and trying to identify trends and patterns in the data. We're looking at those trends and patterns in a regional or country based cohort, the nature of that spend, or maybe even sometimes something more specific like the job area for employee spend, like the sales force. We have behavioral analyses that really adds an interesting lens, because we're enabling this ability to look for odd behaviors in any of the transactional detail. And one of my favorites tends to be the aged expense analysis that we have in employee spend, which assigns risk based on the age of the transaction. And really the theory here is that employees wait to submit transactions for approval. The reason they may actually be doing this might be purposeful. They might be taking 6 months to submit it because they realize it was inappropriate and they're looking for the right time. Maybe they're looking for their manager to be in a good mood, or maybe they're waiting for a completely new manager, or possibly they're waiting for their manager to step away from their computer. So we're really zeroing in on those behavioral types of perspectives. And then lastly, and of course, you must have this, is those policy-based or control-based analytics that ensure that transactions are being captured that fall outside of bounds, outside of policy stipulations or general norms. And this is, particularly helpful because getting those controls into some source systems can be a chore. Or you may want to look at something that's not really against policy, but is against what you would expect as a norm here. And I feel like that's really important, because risk is about what's normal, what's expected, and things that fall out of what's expected or what's normal is really, where things can, pile up and go wrong and present a huge liability. So, beyond those different types of analyses, we've really tried to capture a lot of really interesting risks in our analyses. We have the ability within our application to allow the customer to curate that to their specific need. What's going on in their industry? What's going on in their company? What is their perspective on norms? And getting that into their criteria. And that is something that differentiates LexTegrity's monitoring platform that others don't have. When we look at the other side of the house, from some of our competitors, they're really just flagging things. And they're really taking it from an analytic by analytic approach, which ends up just generating a lot of noise, a lot of false positives. We really focus in on the transaction and the risk of the transaction as a whole and why it's a risk, rather than kind of the traditional audit approach where it's analytic by analytic and you're just like scanning. Oh, what was a hit? What was a flag? Our analyses have the basis as a transaction, but we're also telling you when an analysis generated a result there, what was the severity of that result? Was it weak? Was it moderate? Was it strong? Was it something beyond strong that says hey, this is an automatic risk for you. It must be looked at. And we have things like that when we think about high risk countries. You may be working regularly in Russia or one of the BRIC countries, and that may be a different type of risk for you. Maybe it's strong, maybe it's moderate, um, but maybe you would never expect a transaction to come through from Somalia, for example. So you've assigned that to automatic. That's ensuring that you see that. And so we really have this fungible way of getting at what is something that should be in front of you. And we strongly feel that other offerings typically fall into one of two camps. The first being either back office or control focused support, basically another cog or an extra cog in the wheel of accounts payable or T&E departments, which are just making sure someone doesn't spend over their $75 dinner limit, or paying for alcohol when policy disallows it. But the second camp is really that big four type of offering where their solutions are really kind of a means to book more hours, interpreting the results of these sporadic analyses that have all these flags, which can only be generated as after you've done extensive interviews and project plans, and you've brought in teams of people to do the data gathering, to do the interviews, the generic dashboards, and then getting that stuff updated or curated based on how your perspective changes over time then requires a new statement of work. So, we think of ourselves as really technology enablers in this space, software that can, work with you and be curated to your specific needs, and not something as a means to book more hours or to put something really that, is somewhat fragile to a degree in place that's going to require constant attention.
And let me pick up on a point I think I wrote down correctly, which was uh, looking at the entire transaction. And
Yeah.
then you also pointed to looking at each component of the transaction and why that can be done, but it really doesn't give you the overall picture of the transaction risk. So if I can maybe outline a transaction where a BD representative goes and calls upon a customer, gives travel and entertainment spend, you get on the bid list somehow.
Yep.
And you may or may not get inside information on the RFP list. You get the RFP, you respond to the RFP, you then win the RFP, you negotiate the contract, and now you have to execute that contract. And that may require third parties, that may require business partners. Certainly, if you've had commissioned sales agents or other representatives on the sales side, you may be making payments there. Then you execute and you go forward. Is it a fair assessment to say that that's the risk you think compliance practitioners should be focused on? And then how if I have articulated that correctly, how does the monitoring and data analytics suite available from LexTegrity let the compliance practitioner or give the compliance practitioner that entire view of the transaction rather than just the $75 GTE spend or the alcohol paid for or the too many visits to a government official, et cetera?
Yeah, Tom, that's right up our alley of where we're thinking about the risk is, because what a lot of people are doing is forsaking all of that, the byproduct risk, the other risk that comes together around that transaction, and just focused on the transaction and flagging what isn't in line with policy. So what we're out there to do is to bring in that transactional data in as robust of a fashion as we can. I'll give you an example with vendor spend. When we look at that vendor spend data coming from SAP or Oracle, we're not just bringing in the payment. We're actually bringing in the payment that was made across 8 different invoices. And then from each one of those invoices, we're digging into the actual invoice detail that came along with that, the invoice line item detail, the purchase order information, as well as the purchase requisition details. At every one of those steps of the business process, there's a little bit of detail that could be relevant from a risk perspective and go into this identification of risk in that transaction as a whole. And alongside of that, we've also got the information coming from the financial side of the house, not just the P2P, the procure to pay area. We've got the financial, which accounts is this impacting from an expense perspective, because there's a lot of good clues there. So we bring in this holistic piece of that transaction, and then we supplement it with other information like information from your HR master file. So as you're looking at that transaction, who approved the PO, who requested the purchase requisition, who approved the ultimate payment or the invoice, and maybe who, how does their network look in regards to that? Because, that information is, while supplementary, can be very helpful to connecting the dots of risk as you start to see other things happen, or you catch an exception in this area, and now you say, well, so and so was a major part of that. Let's see what else they've touched in this area, or looking at the cross impact between employee spend and vendor spend. And then beyond that, in the compliance space, and you can tell I get really excited about this, is we've got this other information from the compliance program itself. We've got hotline reports, we've got due diligence metrics, we've got audit reports, training completion statuses, all this other program information that compliance has a hand into that can feed into this transactional data. So from the due diligence perspective, when you're looking at those invoices from a risk perspective, it's going to be helpful if you knew that in the due diligence area, your ultimate approval on that was proceed with caution or proceed with mitigating controls, because that was a clue that during that due diligence process, you found the risk, but you said, we can handle this risk, and you let it go through. But what is typically the case is you then forget about it. Okay, so you let the vendor essentially, be a full-blown vendor for you, and you really, what's the mitigation that you do? Maybe every year you re-vet them or something like that. Well, but it could be impactful because if you're elevating the risk profile of those specific invoices that are now coming in against that vendor, it can help potentially prioritize it into your view and become a better risk that, or improve the chance that you're actually going to see that particular transaction and spot something that is starting to look unusual from your perspective as somebody that understands where your organization is going. So again, I think just to close that out is really, it's not just about the transactional detail, the date, the amount, the vendor. It's about how that transaction came to be, and then the supplementary information such as due diligence information or hotline things that are coming in or audit reports for that country or that business that can help you change the risk profile in the right ways and capture that kind of nuanced risk that is there with that transaction detail.
Andy, unfortunately, we are near the end of our time for this episode, but I was wondering if our listeners wanted any additional information on any of the topics we've talked about in this episode or wanted to contact you. How could they do so?
They can absolutely go to our website, lextegrity.com, where you can find a variety of information about, our company and our tools. You can also reach out to me on LinkedIn at Andy Miller, or my email, amiller@lextegrity.com. Thanks again, Tom. I appreciate it. Love your podcast.
Please join us in our next episode where Kara rejoins us to discuss pre-approvals and third-party due diligence.